Hello and welcome to Livewire's Buy, Hold, Sell. I'm Ali Selby and today we're joined by Junbei Liu from Tribeca and Randall Janicki from T. Rowe Price for a full portfolio reset. Our guests will be sharing some of the opportunities they've identified today, the headwinds they believe you should keep on your radars, as well as the 3 stocks they would own if they had to start from scratch. Thanks so much for joining us today. Guys, really excited for this discussion. The ASX hit a new all-time high today. Is now a good time for a full portfolio reset? Randall, I might start with you.
Thanks, Ali. Look, I'd say yes. Whenever you reach a higher level in terms of asset values and prices, it's a good time to think about where the opportunities are. And if you've done well out of it, also where you want to take some profit. I also think that given it's the start of the year, I know we're 1 month in, it's always a good time ahead of reporting season to kind of think about the risks and the challenges. So I think this is a really important time given that valuations have moved high. We're probably about 1 standard deviation above the market average in terms of multiple over the last 10 years. And earnings risk, I think, is also quite high. So I think now is a good time to think about the portfolio, where the risks are and where the opportunities are.
We will get into some of those risks later on, but I go over to you now, Junbei. Do you feel like now is a good time for a full portfolio reset?
Look, absolutely. I think, first of all, we always need to have the best portfolio forwards and making sure every stock you hold has its purpose in the portfolio. Now, heading into reporting season, we need to focus on what their earnings, what's the misses, what's the beats, and what were some of the feedback we got from some of the industry players we heard back. So January is actually an incredible busy time for us to get these sort of senses so we know what the portfolio might look like, what the stock might look like when the result does come through.
Okay, before we started filming this, I was talking about reading Howard Marks' memo recently. He talks about there being a lot of Goldilocks thinking in the market right now. What are the risks that you think investors should have on their radars in 2024?
A share market, there's always plenty of risk. Last year, we worried about the recession and the like, and they never eventuated. This year, I actually think, with interest rate heading lower towards the end of the year, with the recession risk certainly look like it's off the table, we do think that it's more about the unexpected geopolitical risks or US election. These are the exogenous shock that we talk to. It's very difficult for share investors to sort of price these in. They tail risk. They're small probability, but they could cause an impact. But net, I think equity market actually looks pretty good compared to last year.
Okay, over to you, Randall. You talked about there being quite a lot of risk before. Yep. What are the risks that you have on your radar right now?
Look, I think one of the things to think about is taking the other side of the consensus view. So the market now is pricing in a soft landing. The economy has been more resilient. Earnings have been more resilient than people expected. And I would say that's now priced in. So the main risk is that that gets disappointing in terms of how things play out. And so this reporting season, I think, is key. We had a soft retail number for December. And all of the anecdotes are that the economy is quite mixed. So I think the biggest near-term risk is around earnings. The other risk I think that people are complacent on also is inflation. Everyone's now going to tell you they're going to have this nice glide path and immaculate disinflation. I'm not so sure. I think in the second half of this year, you want to worry about that. The geopolitical stuff, I think in a funny way, we know about it. We just think something bad's going to happen. And normally when that's the case, it doesn't happen. So I'll worry about those other 2 risks as the key ones for 2024.
Okay, with all that in mind, where are you finding opportunity?
So again, kind of putting on the contrarian hat, I kind of look at what didn't do well last year. And therefore, where the valuations are more attractive and the fundamentals are getting better. And I think healthcare looks attractive. A really tough 2023, whether it's CSL, ResMed, a lot of the healthcare stocks disappoint in terms of earnings. I think you've had that rebase, and this year looks good. I think also that energy looks good as well. Again, tough 2023. The fundamentals, I think, are looking better. We're kind of basing out. And then finally, I'd say lithium as well. And kind of everyone's going to give you the bad story about what's happening with the lithium price. And obviously supply is being curtailed. That's a really good thing. So I think there's a good setup for lithium to buy it this year and really prosper into 2025 and beyond.
Okay, over to you, Junbei. Where are you finding the most opportunity, in which sectors?
I must agree, healthcare is incredible in terms of value, but that's the obvious one that, your likes of CSL and the ResMed should do quite well. But my views, though, in terms of the economic reality is that, we're doing okay. Yes, consumer stock, retailers, the economic environment will slow down. Consumer will have to pull back, but that's in the expectations. People are still expecting JB Hi-Fi's earning to fall 25%. So yes, share price rallied, but that's on the earning of falling 25%. And so far, it's actually doing okay. Mid this year, don't forget, we've got the tax cut coming through for the lower to mid-income sort of tax bracket people, family households, and they will spend a lot of that money. And now there's increasing more fiscal noise from the both side of the party heading into the budget. So, I actually think there's a lot of stimulus coming through for the consumer sector. So, I think actually this sector, yes, they may have a tough reporting season, a little bit soggy here and there, but it's a little bit mixed. But this is your buying opportunity. I think this sector will do quite well.
Okay, I'm quite excited for this. We asked our guests to bring along 3 stocks that they would own if they could start completely from scratch. Junbei, what would be your 3 stocks?
Look, I completely start from scratch. I will still own them. I still own them in my portfolio, and I will buy them any day. Pro Medicus is number 1. I think this stock is an incredible, huge addressable market. It's expensive, but it is one of the very rare growth finds. You can find it here in Australia. Next one is, Light & Wonder. I think it's a smaller company, less liquid, but it is dual listed over in the US. It is very fast growing up and catching up to the likes of Aristocrat, great management team, and it's doing really well. There's other company, look, if we're moving to a little bit more defensive, so I think the likes of ResMed is looking very good in the portfolio. Very tough year, and in the last 12 months, but heading into a much better environment this year.
Okay, over to you, Randall. If you had to start completely from scratch, what 3 stocks would you own?
Look, the 3 stocks I would own are Aristocrat, ResMed, and Pilbara. And I'll tell you why. So starting with Aristocrat, it's the market leader in terms of electronic gaming machines around the world. It's moving into digital gaming as well. But the thing that's fascinating is it's been a stock that's delivered very strong, consistent earnings growth now for the better part of a decade, but it hasn't re-rated. So from multiple perspective, it's actually lower than its average for the last 10 years. And we still think it's got double-digit earnings per share growth to come for the next 3 years. It's gaining market share. So the momentum we think is going to continue. The second stock is ResMed. Had a tough 2023, for the reasons around some missteps around the cost structure, concerns over the impact of GLP-1s on the use of CPAP, which is obviously their core business being in the sleep apnea market. We think a lot of those concerns are overblown, and that's now coming to the fore. And now you're also seeing that Philips, its main competitor, is really going to be out of the market for even longer. So ResMed, we think, is going to be the dominant play globally for quite some time, and its valuation looks attractive. And then the third stock's Pilbara. And that's, again, because if you think about it, we are going to require enormous amounts of lithium for many, many years to come, for decades to come. So whilst there's a short-term supply imbalance now as demand has slowed, it's still very healthy, but it has slowed, we think we're going to get this curtailment in supply, bring the market back into balance, and then we're going to see price improvement going forward. Prices have come down by 80%, we think we're at a low, and that's what's going to drive the stock going forward. But the key point I just highlight behind all those 3 stocks is that they've all got good valuation support, and I think that's what you need in a market that's at an all-time high.
I want to know what went wrong for you in 2023. What was that dud in your portfolio that you just regret buying, and what are you going to do with that stock? Did you sell out of it, or are you holding on to it this year?
Look, the biggest dud in the portfolio was ResMed. And that was really a function of the fact that I think we were a little bit slow to react to the noise around GLP-1s. And whilst we don't think it is a bigger, longer-term risk and issue as the market believes, I think it always creates that uncertainty about what it means for the earnings profile. And at the same time, I'd also say ResMed, they had some issues with their cost structure, where I think a lot of companies kind of let their cost structure become bloated over the COVID period. ResMed's definitely one. So they had to take a big restructuring. So that all led to some pretty poor share price performance. So when I think about the attribution in my fund, ResMed was the worst performing company and therefore the dud in the portfolio.
Okay, over to you, Junbei. What was that stock that kept you up at night? What was the biggest stud in your portfolio?
Oh my God! Actually, not to sound like we all hold the same stock. It's actually Pilbara. It's been very tough for the last 12 months. Because we're a long short fund, so fortunate for us, we can hold long Pilbara because we think it's it's a company that has great balance sheet and it's very low cost of production, and lithium is a space that we do believe in, and we can short the ones that's yet to make money. That sort of worked for us, but Pilbara has been very tough. I do think they're heading into a much better environment now next 12 months. And I do think it's with the M&A activities that are happening in the industry, it certainly sounds like that it's just bottomed.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.